Hi, this is Alvin from Dr. Wealth. The Chinese stock market has been rallying very hard since about 3 months ago, and it is time to take stock of what has happened and what are some of the stocks that we should take note of, especially the leaders, those that outperform the entire index. And these are the leaders that we want to focus on because, especially for those who are going to buy short term, these are the leaders that you want to ride the momentum on and profit from them. So I separate them into 6 recovery themes, as you can see in the screen. So number 1 is tech, then we'll look at casinos, then third we'll look at retail, fourth travel agencies, fifth real estate, and sixth education. And we also will try to understand what is underpinning this recovery. Why are these recovery themes stronger than a lot of other sectors out there? First part is where we try to find out where is the strongest sector. And it is no surprise that technology is the strongest recovery for China even at this point in time. This is because the tech stocks are not just helped by the reopening of China, but it also have the regulation threat going off, right? Because China government has keep repeatedly saying that the regulation is coming to an end. They really fulfill the promise because it has been quite many months since we've seen a very large scale kind of implementation of any tech regulation. So we can say that the regulation threat is over and now it is time for the digital platform to grow again. And that is why the tech companies have been rebounding hard. So if you take a look, the best performing ETF is actually a tech ETF, which is the CraneShares CSI China Internet ETF listed in the US by the ticker KWEB. So we will take reference whenever we talk about performance in this video, we are using the date since 31st October 2022. Why that fateful day? Because that was the bottom. Okay, that was the bottom of the Chinese stock market, and it was a very strong rebound from there. So this ETF itself has regained 82% since then, and that is the best performing ETF if you want to get onto, right? Because if you compare it to other tech ETF like Hang Seng Tech ETF is up 60%, which is not bad. But of course, KWEB did 20% more. And China Technology ETF CQQQ is up 51%, which is less than Hang Seng Tech Index. So if you're looking at some tech ETFs, these are some ideas that you can look at. And we will take reference, I highlight there, and MSCI China ETF is up 42%. So that is the benchmark we're going to use because this MSCI China ETF is the broadest index that we can use to gauge China's stock market performance because it includes the tech, it includes the A shares, it includes Chinese stock, no matter where they are listed, it's all included in this ETF. So it's the most comprehensive. So this ETF is up 42%. If any stock that's up less than 42%, they are underperforming. If stocks that are above this 42%, they are outperforming. So that's how I come up with the list of stocks that we're going to look at later. And we also see Hang Seng, which is the tracker fund of Hong Kong, up 37%. So Hong Kong stocks are generally still underperforming the broader MSCI China, which I think is because it lacks the exposure to the US ADRs, where Chinese companies are listed. Some of the Chinese companies are listed. And we also have CSI 300, which is predominant A shares, which are listed in Shanghai and Shenzhen. It's up only 18%. So you can really see that the outperformance is coming from the tech stocks, especially China stocks that are listed outside of mainland China, whether they are in US or in Hong Kong. Okay, that will give you a bit of sensing where the performance are. And let's dive deeper into the tech sector. And of course, when we talk about China stocks or tech sector or the big tech, we can't run away from Tencent and Alibaba. These are the two big brothers, tech brothers in China, and they are not bad because Tencent is up 75% and Alibaba listed in Hong Kong is up 71%. These are above the 42% for MSCI China, so there are outperformance even for these two counters. And the second group of tech stocks I want to look at are those that I compared among the KWEB holdings. So we know KWEB is the best performing ETF. I want to find out where the outperformance came from. And it came from these top 3 tech companies. The first is this Dada Group. And I'm sure most of you have never heard of this company because when I saw it first, I also didn't know this company exists. So it's essentially a local delivery kind of service like your GrabFood. So they are local delivery, it's up 300%. And that is less than 3 months ago, right? So it is fantastic performance. And Bilibili is a streaming platform, is up about 200%. And iQIYI, which is a Netflix of China, is up 197%. So these were the 3 biggest winners in the KWEB portfolio. So that's one way, right? You can also dive into the KWEB ETF, look at the holdings and see whether you can find better performance among that crowd. Next group, we want to look at the casino stocks, and this is no surprise because when China reopen their borders, there will be more people traveling to Macau, and especially gamblers. That's where the revenue for these casinos can start to recover since COVID started. There are 6 Macau casino stocks, and as you can see from the screen itself, generally they have very great performances, up triple digit, right? We have SJM Holdings up 105%, Sense China up 117%, Melco up 142%, and the best performers are MGM China and Win Macau, both are up more than 200%. And Galaxy Entertainment looks like a laggard, right? So in this case, generally you want to bet on the leaders, because when the market recovers strongly, the leaders will lead the pack. And this will also give you a sense, besides just the fundamentals, right, which are really the better casino stocks out there that if you're interested, what should you focus on? Next, let's move on to retail. Retail includes those shops as well as restaurants. I group them together. And of course, it is understandable when the people are no longer in lockdown, they will go out, they will spend more, they'll buy stuff, they'll eat out more often, and that will increase the revenue for these retail companies. So the best performer I found was Pop Mart and Miniso. So these are selling those kind of figurine stuff. And just want to share with you about this Pop Mart. When I first heard about it, I didn't know that it was so popular. So I went to dig around, and in fact, I actually visited the shop that I didn't know it was Pop Mart's shop. It's also available in Singapore as well. So they sell figurines like this, a bit like Bearbrick, and of course it's a cheaper version, and it's like 300 Sing dollars for this figurine. I wouldn't buy it myself, but it seems like it's very popular as among the younger friends. This is something that Pop Mart has hit the right note with the young crowd. And Miniso is another those kind of like cute stuff they sell, whether is it home utility stuff or whether is it like stationery things for kids. Okay, so it's just too very cute, right? Also not my kind of thing, but likewise it's done well, 146% from 31st October 2022. And Hai Di Lao is a restaurant, and this should be quite familiar to you guys. It's been very popular around the world, especially in Asia actually. So the steamboat culture has been very sticky, and it's up 103%. And Jiu, maybe you have not heard of it before. It's another restaurant group from China. So they do many different kinds of restaurant, pushing different kinds of Chinese cuisines, right? And it's also up 86%. Okay, so these are the retail groups. And let's look at travel, right? So now borders are open. It's can't wait to leave China and visit the rest of the world. As my personal experience is that you can really see a lot of Chinese tourists, no matter which country you went to, right? I went to Morocco, I saw them. I went to Barcelona, I saw them. They have been like absent for the last 2 years. So it is time that they come back to normalcy, and there will be more flights to be booked, more hotels to be booked, and that is where this kind of online travel agencies will benefit. So the top would be Trip.com, is up 66%, and this China Duty Free group is not really an online travel agency, but they do benefit from travelers because that's where people spend more on duty free when they leave the airport. So that's up 64%. And we have Travel Sky, which is like the IT system for ticketing, right? The airline system for booking flights and things like that. So they sell it to the airlines, and it's up 50%. And there's a Tongcheng, is up 50%, is another online travel agency. I would have expected to see better performances, right? It's not bad, it's outperforming the entire index, but I would probably hope to see like more than 100% return, triple digit returns, as with the retail shops, as with the casinos. But somehow this travel agency seems to be lagging in that sense. And another surprise group is the real estate group, because we heard a lot of terrible news, almost like in a meltdown in the sector. We heard a few defaults. So why would people want to take on the risk to buy this China real estate stock? But that doesn't mean that there's no opportunity, because it will not mean that all Chinese real estate companies will die, right? So some will survive, and near miss kind, right? Like Country Garden is up 179%, Long 4 is up 169%, and Jingmao is up 75%, as compared to those that is still suspended, like Evergrande, Shimao, and Sunac. If you're able to spot the survivors, they can actually provide a very high return from here. So I would think that after they are being punished down as a group, there will definitely be opportunities. And even though they're up 100% at this point in time, I do think that in terms of valuation, they're still much cheaper than many years ago. So happy fishing for some opportunities over here for those that are more daring. And lastly, let's look at the education companies, which they also had hit by a very heavy regulation, right? All those private tuition was heavily clamped down in the last 2 years or so. And now, again, these are the survivors. Their share price have also rebounded very strongly, right? So what don't kill you make you stronger in that essence. So again, I do think that there can be opportunities. Like Gaotu is up 82%, one of the best performer among these best performer that we have been looking at. And there's 17 Education up 198%, TAL is up 111%, and New Oriental is up 63%. So again, we can see where the leaders are. Okay, so especially if some of you are some trend followers, momentum traders, you definitely want to bet on the leaders. Only those who are more long-term investor, you want to take into consideration the valuation, right? But I think in general, because of all these stocks have been beaten down so much, even this triple-digit return for this 3 months is not going to bring the valuation to a very high level. So indeed, there are a lot of outperformers that are doing better than the index, and I have shown you a bunch over here. There are actually a lot more. Okay, so happy hunting for some of them. Definitely, China is worth a look. I would agree that it has already bottomed, and October 2022 was the bottom. Now it is on the road to recovery. As we can see, this is a long-term chart over about 10 years of the MSCI China, and it is not expensive. On this chart, there are a few things that I want to share with you. So first, it's not expensive because it is still at the bottom of the channel. You can see that blue channel that I drew on the chart itself, right? So if it's below, near the bottom of the channel, means that there is still some upside, right? It is not overvalued. It's not even fairly valued because they are not even at the dotted line at this point in time. So on the whole, Chinese stocks are not expensive. So there are likely still more room to grow because of the because of the policy tailwind that China is pushing for. And the other thing that I want to mention is that it's very important for these Chinese stocks to go back to the trend line. As you can see, during the end of 2022, it actually dipped below the trend line. So when it dipped below the trend line, it's a very, very bearish sign. If the index cannot recover back to the trend, then the bearishness is too much to bear, and China may not be recoverable and will not be investable at all. But luckily, it really rallied since October, and now it's back in the trend line. So which means the long-term trend, the long-term upward trend of these Chinese stocks are still intact. And that presents a lot of opportunity for those who want to buy into growth or even want to buy into momentum stocks for the short term. So that is how I see the whole thing, right? It is not too late to enter China stocks if you are interested, and hopefully we can see this run sustain for a much longer period. So I hope you like this video. Give me a thumbs up and subscribe to the channel. I'll see you around again. Goodbye.